Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 3, 2020. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The first thing on the docket and front and center on the docket is Shenanigans Central. I'll get to that later, but when we discuss numbers and some intraday activity, I'm going to show you Shenanigans Central. There's a few lines on the top of the screen. It looks confusing. It'll clear up when we do talk about Shenanigans Central and when we do go down to some of the intraday charts. For now, just ignore those lines. One is the former high, 364.38. Another one we'll get to later, and another one you can see the market pretty much closed right on top of it. That's also an interesting one. Also, right out of the book on what I teach, how I teach it, why I teach it, and what I show every single day in these videos, inside the numbers. It's taught in the course, Lazy E-mini Trader. Today was really a great example of the market does the same thing over and over and over again, and if you have an idea of what it does and why it's doing it, you can actually use that to your advantage to make positive trades. That's the point. AKA, this is how the market works. We're going to get into that later. Let's back up a moment and we'll take a 30,000-foot view. We'll take a look at the daily chart. Is anything jumping off the page? Did anything change? Is there anything significant on the chart that we need to know? So we do a little bit of a recap. This is how we start our analysis every single day from a larger picture perspective. So we know what the trend is. That's the first order of business. What's the trend? The trend is up. They are a little extended from home base. Home base is the 20-period moving average, but nevertheless, the trend is your friend until it's no longer the same trend. What else do we see on the daily chart? 3 days in a row, we're hanging around the highs. The first day, they put in a pseudo doji candle. The second day, they do a garden variety retracement of said doji candle and close pretty much halfway up the candle. The third day, they put in a doji candle. Is it meaningful? Well, maybe it is, maybe it's not. What's more meaningful is the trend is up. They've basically been eating time off the clock, and if these things like the doji candles are going to be meaningful, then they're going to have to break certain price levels on the downside in the southern direction. So that's the way we gauge the market. That's the way we take on each and every day. What are they doing? Are they above or below certain important numbers? And if so, what are they likely trying to accomplish? What's the destination? And if so, what are they doing about it? What's the pattern? Yada, yada, yada. And if all that sounds foreign, then you should refer back to the course at Lazy E-mini Trader, because everything that I'm discussing here is really in bits and bytes, but the thing is peeled back in the course. You look behind the curtain and we look to see how and why everything works. So that said, for now, we're going to ignore the doji candle and we're going to say, I know the important numbers on the downside. Inside the numbers, members know the important numbers beneath current price, and therefore, we don't have to worry about what candle has what label on it. One of the other reasons why I go in that direction is because of the volume today. And this is also another discussion that we have to have. The volume today was eerily light. It's almost like the summer doldrum volume. In fact, it was the summer doldrum volume. So how are we going to read that? Does light volume mean the market's going down? Does light volume mean the market's going up? What does light volume mean? It really doesn't mean anything. There's no cause and effect to light volume. But here's what we can say about light volume. And by the way, a lot of people think that light volume is bearish, and that's not the case at all. And we can prove that by saying, what's been the volume of the market, the volume trend of the market ever since the big bottom in 2009. And if you look at the volume, with obvious exception, you're going to have big volume off of big bottoms, meaning spike low bottoms. You have big volume heading out of a low. You have big volume making interim tops. And you have volume in between on certain breakouts. But the reality is, in large part, The market has climbed from the March 2009 low all the way up to current price on low volume. So therefore, low volume is not bearish. Get that out of your head. Just to wrap that part of the conversation up, here's a monthly chart of the S&P 500, the SPY. Here's the March 2009 low. Here's a rally for the next 5 or 6 years, and you can see what happened. The volume was heavy at the low, and then it tailed off. When they made another low, it was heavy again on the way down, and on the way back up, the volume tapers off. So the market goes all the way up on decreasing or light volume as compared to what happened at highs and lows. So the market did go up on light volume and decreasing volume for the most part. What does that mean for today's volume, the extremely light volume? It doesn't really mean anything. There's no direct correlation, but what I want to point out is this. When there is light volume, you can expect a couple of things. The path of least resistance in light volume is generally sideways to higher. We talk about that from an intraday perspective inside the numbers. One of the reasons for that is in light volume, there's no sellers. In order to have selling pressure in the market, you generally have some institutional participation. If there's institutional participation, you have a pickup in volume. So when that doesn't exist, even if the market pulls back, it's a normal garden variety pullback, eating time off the clock. If the volume remains very, very low during a pullback, then it's just that. It's just a pullback inside of the larger uptrend. But when there's a spark, whether it's in the upward or downward or positive or negative direction, either way, any way you want to look at it, when there's a spark and a flood of volume does come into the market will move swiftly, it will move a large amount of points, it will move very fast. We saw one of those at the end of the day today. Again, we'll get to that later. Net. Is there anything wrong with the daily chart of the S&P 500? And the answer remains no. By the way, you had a new high today. Can they continue to make new highs day after day? Can they continue to grind higher? The answer is yes, but ultimately, you're going to need some institutional participation if you're going to have a breakout. Otherwise, you're going to have a series of new highs, inching higher, creeping higher. We don't like creeping markets, and what will ultimately happen is, because you don't have the institutional participation, the first scare that comes up, the first piece of news that the market deems bad news, a flood of volume comes into the downside, they break certain price areas on the downside, and hence begins a corrective move. So what I'm really saying is, if you don't get the institutional participation on the upside in terms of a breakout type move, you will get it on the downside. It's just a matter of when. And oh, by the way, since we're at new highs, from what price? Here's an hourly chart. Before we go over to inside the numbers, I want to set the stage a little bit so that when you read the commentary, if you read the commentary, you're familiar, having already seen the chart, already having an understanding of what was being said, what was being discussed inside the numbers during the trading day. The day begins with this hourly candle. It's a breakup candle. Therefore, it becomes a point of interest for me. Couple of things were going through my mind early in the morning. While the market was bullish, were they going to run away? Was it going to be a trend day higher? Or would they just peter out? Was there enough mustard in the jar? Were they just going to eat some time off the clock or pull back or a combination of both for a while? And that really comes as a result of the volume is light and they can go higher in light volume. But again, without institutional participation, everything happens on a macro and also a micro scale. So the same thing I just discussed from a larger picture perspective about the volume also occurs intraday from a shorter time frame perspective. So in my mind early in the morning, and remember, inside my head, it's a dangerous place to be. We know that for sure. I want to portray examples. I need to put out the scenarios going forward at multiple times during the day. If the market does this, expect this. If you see price get below this, expect this. So I'm saying, where am I going with this early in the morning? And I'm saying, I don't believe in the trend day higher for the volume reasons and other reasons. Okay, so what are my other options that I can put out to Inside the Numbers members? My other option was they're going to peter out, they're going to eat some time off the clock, and what we're going to be watching is an important spot. We're going to be watching the low of the breakup candle. As long as they stay inside of 366.65, and that's the top line you see up here near the low of the breakup candle. So as long as they stay above the low of that breakup candle, then they're okay and they're doing what we'll call the garden variety thing. They do this kind of thing over and over and over again. How do we know that? We know that because we discuss it here every single day. It sounds like a broken record, and here we go again discussing the same thing because it worked again. So look what happened. You see, each hour they go back and forth. The next hour, they come close. They don't quite get to the breakup candle low. They bounce away. The next hour, they do the same thing. They don't come as low, but they're back and forth. Finally, later on in the day, in the afternoon, they come into the spot, they run the test, and they close back above the low of the breakup candle. What do they do in the next hour? They make a new high. Now, they had an end of the day collapse, and we'll get to that later. Let's focus on one number at a time. The number we're focused on now was 366.65, and what you'll notice is for Inside the Numbers members is that's the number that we were focused on. As long as they held it, hourly closes. You could have a scalp trade off that number. There's something for everybody. So we know 366.65 was inside the numbers. The second number that was inside the numbers was 365.60. You'll also remember that from yesterday. It pays to know your numbers. Now, this is interesting. They had that end of the day collapse. We can say it was on a piece of news item about vaccines and Pfizer or whatever. Doesn't really matter. And here's the point that I like to make from time to time. Sure, the news was an excuse that sent a spark into the market so the market could do a certain thing, right? Because what they did was run a test of an important number. You'll see that 365.60 was inside the numbers. It was in the notes, and it was there because with a break below or closing hourly below is how it was put, below 366.65 would open the door for 365.60. So how do we know these numbers, and why does the market run to these numbers and then turn around and go back in the other direction? Why was 365.60 a destination, and why was it a spark of a news item on a vaccine or Pfizer or whatever? Why did it take that to help the market go run a test? Now, some of the whys behind all that stuff is really what my life's work is all about. I'm always trying to figure this out. I mean, the conversation kind of goes like this sometimes. The market dropped because of XYZ piece of news. This isn't my conversation, right? This is the media, or this is somebody else's conversation. And then they say, well, the market rallied, or the market bounced, or it turned around because the news turned out to be bogus, or there was a different piece of news. And that's the two conversations that go on. For example, with the high today, meaning the rally, and then the sudden drop was on a piece of bad news, and then all of a sudden the rally or the bottoming process was on another piece of news. But nobody could ever answer this question. Why did they turn around at 365.60, and why was that number on the board ahead of time? How could that possibly be predetermined? Now you start to see why being inside my head is a dangerous place to be. Just for fun, here's a glimpse at Inside the Numbers, the 133 post, and what you'll see here is a fumble opens the door for 365.60, give or take. There's no question that deserves a how you doing. Because I gave you the synopsis of what was going on today, what I'll let you do is read the notes, pause the video. I'm going to scroll up, and I'm not going to go through everything in detail. Here you see the pre-market commentary, the early thoughts. I urge you to pause the video, check the numbers out, write them down on a piece of paper. After that, go back to the charts and study the charts. Look at a variety of different time frames. Look at 5-minute charts. Look at 10s, 15s, 30s, 60s. Look at a variety of different charts because you'll get a glimpse and you'll look at the market from different perspectives. Here again, pause the video as I scroll up and read the stuff. You're going to learn stuff. There's a lot of stuff that was taught today inside the numbers. I don't want to reteach it in this video. What I want to do is get past this part. We'll go over the stocks on the move real quick, and then I'll go to the other markets, and I'll have some other thoughts about what's going on across the market. Probably the most important thing that you will see here in the commentary throughout the day is the fact that we were zeroed in on the breakup candle low. And then when you start to see the market achieve or reach a specific place that was discussed before, then it starts to look like a destination. And then all of a sudden, the market gets to the destination. You start to see a bull-bear battle emerge at the destination, or what would be the destination. And then it starts to look like, hey, there's something to this. All of a sudden, they ran right to this spot, and then at this spot, they stopped going down, and then all of a sudden, buyers stepped into the market, and they started going back and forth, and now they started rallying up a little bit, and therein lies what looks like a destination, what smells like a destination. It's the duck theory. When it walks like a duck, smells like a duck, it's generally going to be a duck. Now, what's this chart doing here? Again, we're talking about the same thing. I blew up the hourly chart a little bit. I'm pointing to the breakup candle. I'm pointing to a few hours removed from the first breakup candle of the day and what the market was doing. They were eating time off the clock. We're watching for a test of the breakup candle low. We got that test. Now, this is one of those things where there's something for everybody. I mentioned it before. Some traders would rather just have a scalp trade at that price. They want 2 points on the ES. They want 3 points, 4 points, whatever it is. They want a small scalp trade and they want to move on. Other traders are looking for a more meatier, a more juicier trade. They want the rally. They want the new highs. They want to buy the breakup candle low. They want to sell. They want to take profit along the way, but they don't want to exit the full position until they have many, many more points in their pocket than the scalp trader. Again, two different types of traders, same price, two different approaches, and there's well more approaches than that. You have to understand there's something for everybody. Just because I say one thing or don't say something else, I'm always aware that I have a variety of different traders listening in. Let's take it into the end of the day right here. And in the last hour of the day, it's an anything goes. I wasn't really making the commentary for that end of the day shimmy down to run a test of the other number. Very difficult situation if you're looking to trade that kind of move when they do it in the last few minutes of the day. You can't really have a high probability trade into the end of the day with just a few minutes left on the clock, because what happens if you're wrong, even temporarily, and you don't want to hold a position overnight? Then you get stuck. So into the end of the day is really, really a tough thing to do. The traders that are gambling, they're going to do it regardless. Stocks on the move, we're going to take a look at KR. It was the only one that hit our price today. We'll also take a look at Splunk, mainly because I like saying Splunk. If you read the commentary, then you saw, this is a 60-minute chart, but you saw the blurb, we'll call it, on Kroger. Now here's a 5-minute chart. So Kroger missed the number and it went back and forth, and I basically took it off the board for myself and I put that down in the notes. Had I just kept it to myself, there probably would have been some traders entering the trade, and there probably were some traders that took it off the board as a result of me putting it in the notes, and then there's probably the opposite on both. So either way, I didn't get in the trade. The low of day was 30.35. The high was 31.20. One of the members who took the trade wrote me on a successful win, or after a successful win, it was a ground rule double. And it was. It was a ground rule double. It was better than a base hit. Low of day. The numbers work. Of course, there was a method to the madness on why I wanted to bring up Splunk. Look at this haircut at the open. This thing closed yesterday at 205.73. The thing opened today at 158.82. That's a buzz cut, military style. My number, and I was licking my chops as it was coming down, it hit a low of 152.52. The number on the board was 151.61. When you have a market or a stock, in this case, that's down that much, and to miss by that little and take off by that much, it's classified as a heartbreaker. Here's a high of 169. Ouch. What's doing over in Camp IWM? Anything happened today? They made another high. Not a new all-time high, but they made a high over yesterday, the day before that. And they're pushing up and then they sell off. Is anything going on here? Can we derive any information from this daily chart? No. It's in an uptrend. They're going back and forth. They're eating time off the clock. And the same thing applies. The same rule applies. You need institutional participation to break to the upside. It doesn't have to be tremendous, but you need some volume to come in to have the breakout. A creeping market is going to fail. A spiking market is generally a temporary market. A big bad trend day on big volume finishing at the highs is generally institutional participation, and you're looking for one of the three, and there's a couple of more flavors out there, and you have to see what's going on each and every day. Right now, they're just eating time off the clock, letting home base creep up to price. So they're not really that extended from home base. So when you're in an uptrend and you're riding the moving averages, price can certainly move higher. But if you stay extended from home base, you're always going to be susceptible to come back to home base. And from 184 to 177, that doesn't feel so good if you're holding a long position. I'm not saying that's going to happen tomorrow. I'm just saying that can happen at any point in time. There's a gap down there to be filled. That's where the 20-period moving average is. And that still keeps the market in an uptrend even if they ran a test down there. So there. What about the folks down at the transportation department? Same to similar routine. They're eating time off the clock. There's going to be traders that want to make a federal case out of the doji candle. It's a tail candle. Fair enough. For me, it doesn't really mean much when you have other dominant things going on in the chart like the trend until you see something else like a spike in volume. Do we have a spike in volume? And today in the transports, we have a spike in volume accompanied by a tail candle. Now, I would much rather see the tail candle come in with the spike in volume at a new high, or at least making a new high today. They didn't do that, but that's okay. You don't get everything you want all the time. However, let's check it out. So you have a tail candle, you have a doji candle, you have a spike in volume, you're high on the chart, you're eating time off the clock, you're in an uptrend, so you have some things that are working against each other. The trend from a longer term perspective certainly takes precedent over a one-day tail candle, a one-day spike in volume, a one-day doji candle. All those things are one-day wonders in the making until they become meaningful. How does this one become meaningful? Well, you got to really get down lower in order for it to get a grip on the market in the southern direction. Again, you're above all the moving averages, so even if you came down a little bit, even if you came down 300 or 400 points, all you're doing is running a test of a former breakout area, 20-period moving average. There's a gap a little bit lower. So all these things can be tested. And if that's happening, you take a look across the horn at other markets. What are they doing? What numbers are they achieving? Do we have one market leading another? Listen, we have two favorite leading indicators. We have the IWM. That's my favorite market leading indicator. We also have the transports. That's in the second or shotgun position, but my first favorite canary in the coal mine. So the fact that that's in the back of my mind, and I see the tail candle, and I see the volume, and I'm looking and I'm saying, we got to watch this thing. You never know. And then you take a look at the hourly chart and you say, hey, wait a minute. What did they do? They ran a test of the same break up candle low from today. How you doing? By the way, when I said break up candle low on the transports, it reminded me I forgot to mention or point something out on this chart. This is also one of those shenanigans things. This is really where the shenanigans comment came from. So check out where the closing price was, 366.67. Well, what was the breakup candle low? 366.65. What happened in the last 1 minute candle of the day? They ran all the way up over 66, 67 cents or more. Look at from down here though. But just in the last minute, they ran all the way up to do what? To close above that low? Is that what they were doing? What would be the other reason that they would stop there into the close? There is no other reason. Back to the transports. hourly chart. So is that what they were doing, or is something else developing that's going to materialize Friday morning? Well, what do we have Friday morning? Could we have a spark? Absolutely. We have a phony jobs number. 8:30 a.m. Eastern Standard Time, you're going to have a release of the phony jobs number. Why do I call it the phony jobs number? Because nobody really knows how many people are gainfully employed or unemployed in this country. It's an impossibility to know. The way they do it is by statistical analysis, smoothing, margin of error. It could be plus or minus 200,000 or 300,000 jobs every single time they put out the number. It's a bunch of bunk. Then what they do is they revise the number like 2, 3, 4 times down the road. Nobody knows what the revisions were, so they'll put out a report with tomorrow's number, and then they'll revise last month's number and the month before that. So nobody really knows what the numbers are. However, the market reacts to the release of the number. That's why I like to call these type of things kabuki theater. It can also be a spark, A, pulling the rug out on the downside, or B, they could use it as an excuse to finally get up to the next big fat round number of ES 3700, SPY 370. You saw that in the notes inside the numbers. We've talked about that. That's really the prevailing thing that's going on. What's going on out in Silicon Valley? Well, check this one out. Similar situation going on in the Qs. This is how you know that the numbers work. So once you learn how to read the tape, you learn how to read the charts, the numbers, then you're not surprised when they do certain things. You're actually expecting them to do certain things, stop at certain numbers, run tests of certain numbers. So we have this going on. We have a new high today in the Qs. They sold off. They put in a tail candle. There'll be traders trying to make a federal case out of that. You have no accompanying spike in volume. We're not going to say anything more about that. But what we will say is, where was the low of day? Well, first let's point out, where was the former high? And we know this number. We've been talking about it. 303.50. So today they're above that number. They're above that number. Well, check this out. Here's an hourly chart. This is the first hour of the day. This is the 10:30 a.m. candle. The next candle, they run a test. But the low is 303.67. Not quite there. All day long, they're above it. What happens at the end of the day? The low is 303.53, and they bounce away. Do they know about that number? Yes, of course they do. Buyers stepped in ahead of the number. The number, once was resistance, becomes support. How you doing? We'll stay on the hourly chart for this one. How about the XLF? We know they're above the weekly number, and that's going to be important tomorrow's close, 2680. Right now, they're up at the gap, which was 2855. They're above it in the last candle of the day, last hour of the day. On that sell-off, everything gets thrown out with the bathwater. What do? They run a test of what? An important number, 2855. They're back above it. It's almost like the piece of news is released so that these markets can go test numbers they need to run a test of, get the business done, get it out of the way, and move on. So therefore, the news does have a purpose. Smash mouth. Uh-oh. Red day, 8 cents down, high on the chart. However, they made a new high today and finished at the lows. We have to pay attention. Couple of reasons. A, it's in an uptrend. That's A, number one. But number two, the reason we have to pay attention is because the semis are a good proxy for the tech sector. If the semis start to sell off, they can come all the way down to 201, the 20-period moving average. Guess what? That's a lot of points down. A lot of bad stuff across other markets and stocks is happening while that's going on. A lot of the semis are down many, many points. The Qs are down. The SPY is down. The IWM is down. If the semis are down at 201, everything else is selling off. Now, they may do that. It's running a test of a former breakout area, the moving average or home base, and technically speaking, that's common, normal, garden variety stuff that the market will always do over time. However, you have to realize this is the awareness. If that's going on now, even if it takes 2 days or 3 days, there's a lot of damage going on in the market. What's the flip side of that? Today was nothing. They don't do that. They continue grinding higher and life goes on. The band plays on. Do I know that the semis are going to come down? No, I don't. Here's what we do know. They made a new high. They finished at the lows. It's a puzzle piece. It's on the table. You have to be aware of what's going on the markets that act as leading indicators of other markets, a la the IWM, a la the transports, the canary in the coal mine, hence the volume, a la the SMH. So if I had to pull out two important things from today, things to be aware of, the SMH and the transports. I got the volume and I got technically a reversal candle in the SMH. Made a new high, finished at the lows. So I have a leading indicator or leading market to the tech sector on the first hand, and on the second hand, I have my favorite canary in the coal mine. How can I not pay attention to that? Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. I'm going to pull the ripcord here today, folks. It's everything I wanted to and intended to discuss. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.